We are now going to take stock of a handful of companies out there which are buzzing in trade. But before that, I want to take a very quick look at how markets are faring. It's been a fairly quiet afternoon, not much to speak for in general, and that's always good news considering the Nifty is trying to inch back towards the mark of 25,000, and a little over that is where it made its life high about a few weeks ago. But the other stock, of course, which is in focus today is Zomato. It has announced the acquisition of the entertainment ticketing business of Paytm. It has not seen any reaction. In fact, I'm looking at Zomato's volumes on an intraday basis, and they're very, very ordinary. So it does seem like, one, the indications that came through back in mid-June are coming to fruition. It does also seem like a lot of this has been relatively factored in. And when it comes to the valuations at which the deal has been done, well, it seems like at least investors not too perturbed about that. But let's get in an expert opinion here. We have Karan Taurani, SVP at Elara Capital, who's joining us on the show. Karan, good afternoon. Thank you so much for joining in. Firstly, Karan, what are you making of this deal? At 7 times, well, some suggest that it's an expensive one. Some suggest that just look at the run rate and going forward. What's your assessment? We have read your note. You are constructive on this particular deal, but if you can elaborate a little bit more on this.
Hi, good afternoon. So I think if you look at the deal, in terms of valuations, it is not very cheap or attractive, but I think the valuations are fair because the live events and the online ticketing business has the potential to grow at 15 to 20% on a steady state. And we have just two large players here. One is Book My Show, which is the market leader, and probably the second largest player, is Paytm. So I think it makes strategic sense, for Zomato to kind of scale up their going out business, and Paytm is the best bet that they could have, given Book My Show as a market leader, and they wouldn't want to sell out the stake. Now, what this does, to the going out business of Zomato is that if you look at the top line, it's about 400 crores today. The going out business of Zomato, which potentially moves up to 700 crores, basis consolidation of this Paytm business which is there. Now, this potentially can grow at about 15 to 20% on a CAGR basis, and which means that over next 3 years, you can see these numbers kind of doubling up. So it's a much needed fillip or a boost, for the Zomato going out business. It provides them that kind of scale, and of course, with scale comes economies of scale, wherein you can have some kind of bargaining power in terms of convenience fee percentages. You can have bargaining power in terms of the various artists are on the live event side. So too much to play over here, and execution is key here in terms of how they look at the margin improvement from here on. Because Zomato, from a track record perspective, they've been very compelling both on the food and the quick commerce business. Despite being a late entrant, they were the second or third entrant in both these businesses respectively. So I think if they're able to turn around this business segment, and if they're able to kind of match up to Book My Show scale over a period of time, I think that is the key monitorable. And second, of course, would be the margins, right? So I think they've guided for a very aggressive EBITDA margin of more than 20-25%. If they were to achieve even 20% EBITDA margin, this kind of a business, which is highly fragmented, highly competitive, I think it augurs well, for the overall valuation of this business.
Okay, Karan, I want to understand that Antfin's exit 2 days prior to this announcement. Does this coincide with the announcement, or what are your views on that?
Yeah, so I think that exit has nothing to do with this deal. I think both are very separate things. In fact, if you look at the valuations perspective, our target price of 320, or rather EV that we were building in terms of potential target price, only 1% of that from a valuation standpoint was coming out from the going out business. And with this acquisition providing the much needed boost and flip to the overall top line, we believe that maybe on a forward basis, 2% of your Zomato's consolidated valuation will come from going out. So I think there is no potential impact, or rather any big change in terms of Zomato's valuation or target price, because of this deal. I think this deal is purely to leverage upon the young customer base that Zomato has got, both on the quick commerce side and on the food side. They can use this opportunity to make this the third largest B2C business that they are going to offer. They can probably monetize this app, via ad revenue. They can cross sell, upsell the customers, through the online ticketing to food to quick commerce, everything put together. So I think too much to play at here in terms of synergies and in terms of potential advantages for Zomato. And but yes, the impact in terms of broader valuations is very, very minuscule because Blinkit and the food business, contribute more than 85-90% of the valuation for Zomato.
Karan, I just wanted to understand what is the current annual cash flow that Zomato generates? That's one part of the question. The second part of the question is that enough to cover this particular acquisition? We already know that it's sitting on a cash worth about 12,500 crores on, please correct me if I'm wrong here. My question is, and perhaps some people in the markets are suggesting that even if this acquisition wouldn't turn out the way they're planning to, well, the cost of acquisition in the long run may not be considerable because of the fact that they generate so much cash. What is your assessment on this specific factor here?
Yeah, so I think in terms of cash, it's very clear that it's a very strong business. They make more than 20% of EBITDA in the food business if you look at the adjusted EBITDA, and it is only growing from here on. I think there's going to be more expansion as we go ahead, more levers to play around ad revenue, around convenience, around your platform fee, around restaurant commissions put together. So I think it's a clear winner here as far as the investments are concerned. And in terms of free cash flow, the free cash flow will see a significant rise. They would be generating a free cash flow of about 500-600 crores today in terms of annual free cash flow. But the more and more we see in terms of traction within quick commerce, the bigger improvement that we see in terms of the food business margin improving, or in terms of the quick commerce turning profitable, the free cash flow numbers can even move up to 3x to 4x, over the medium term. So I think potentially, they can generate even 2-3 thousand crores of free cash flow every year. And even if they were to invest, a few hundred crores of money into these businesses of going out in the form of, discounts or promotions or any kind of investments for customer acquisition, I don't think it's going to matter much in terms of overall financials. So, right from valuations, right from revenue, right from EBITDA number, absolute number basis, right from cash flow, I don't think there's any kind of a big impact that one can have either ways, on negative or positive side.
Okay, and Karan, in terms of competition, Book My Show has been in this business for the longest time, and they've not been able to scale up the business, as much as it
I
was
think
required. Yeah.
there was a voice. I think
Sure,
there
I'll
was
repeat the
something else.
question for you. So, Karan, I'm asking that.
Somebody's talking. I think there's a technical glitch.
Okay, can you hear me properly now?
Yeah, somebody was talking in the background.
Sure,
Yeah, you can go
no
on,
problem.
please.
Yeah, so my question to you is that, Book My Show has been in this business for the longest time now, and they've not been able to scale the business as much as they could have, right? So I want to understand that Zomato entering in this ticketing business, do you think that they'll be able to cater to audience that Book My Show has not been able to so far, and how much of a dent can they make in terms of Book My Show's business?
So, Book My Show has been a leader in this business. They have a very strong first mover advantage. And with the pandemic, the trends towards digital got accelerated, wherein we saw that, more ticket bookings for cinemas were done via online. Live events, more bookings were done via online. We saw sports, coming up as a very big proposition. So I think that cloud of Book My Show will remain here. In fact, Book My Show also has got exclusive rights to some of the large sporting properties. We saw that during the World Cup as well. So I think that cloud will remain with Book My Show. It's not very easy to break into that. But definitely, once they reach a respectable scale, even something like a Zomato Live or a District, the new app which they're trying to launch, even they would have some kind of bargaining power here, with the content creators. So it all depends in terms of how they approach the sporting propositions, the IPL franchise. Cinema obviously is there on both Book My Show and on Paytm, so there's not much of a change over there. And how they build their own IP, because what is happening right now is that for a market like India, the events business is seeing massive demand, and this is specifically from a wide nature of events. We've seen a lot of international based events. We've seen other sporting events like Pro Kabaddi League, Indian Soccer League. We've seen other kind of events, like for example There could be some music events which are very special in nature.
Sure.
So I think, these kind of things are only going to drive the demand further. And there is opportunity for them to
Right.
break into this through the niche approach that they have in the events business.
Right. Fair enough. Point taken, Karan. Well, thanking you, Karan, for joining us and giving us your perspective on Zomato and its latest acquisition.